Go.
Good turnaround Tuesday, everybody. How are my warrior followers doing today? So the implication of turnaround Tuesday is what markets are potentially set up for a reversal day. Because the trading pattern is how a market closes Friday, you normally get follow through on Monday and a chance for a reversal happening on Tuesday. Sometimes it's Wednesday. But my two candidates for it are the dollar. So if you go to the new website, you'll see, that's where I'm posting stuff. I posted this dollar sell at, right around 60. It gives targets and stops, and there are videos on this. So anyway, guys, you may want to, and it's right under here. When if you just want to see my stuff, it's under Coach Market Analysis, and it's free. So you could interact with me there as well. So I'm looking at this dollar. It's rallied almost halfway back off this bounce. I don't know if it has any more juice left in it. But I've been talking about, I think the dollar has a chance to pull back to the 98 range. That's going to be the next big test, real big test for the dollar. Because if we start taking that out, we're going to break that long-term uptrend that everyone's talking about on the weekly. Goes back, quite some time. I don't have that line. But breakdown, if we negate this rally and we start breaking down, it's going to break, I don't know, about a 3-year, 4-year uptrend that we've been in. So I still think that there's a chance that we could, pull back one more time. But, this has really been a lazy rally. And, part of the reason for, looking for a dollar rally to 102 was that the whole world's bearish a dollar. We haven't had, I don't believe, COT statistics for a while with the government shutdown. But I thought there'd be a bigger squeeze to get the bears out, maybe going to 102, 103. And I think this 98 level is going to test it, or closing back over par, which is, where the buy stops would be from today's shorts. Maybe that's going to give us one more leg to the upside. The other trade I'm taking is, the yen just keeps levitating, keeps heading up, uh, not really soaring. It's like a grinding levitation act that it's pulling. So I didn't go right into the end, but I'm taking a shot again at the Aussie yen here, thinking that perhaps the top is in here and that this is just some type of correction. And it's a weak sister compared to the other yen crosses. Here's Euro yen. It's making a new high but diverging. Okay. And here's the guppy. About to take out those highs. So I'm selling the weakness in the um, yen cross arena, at least the ones that I'm looking at, and thinking that this was a top. And if ends up being a top, I think that we could see, initially these levels and these levels. So we'll see what happens with that. Do want to talk about risk. Um, That's the big thing on the table, right? And we do have NVIDIA earnings coming out tomorrow. We're challenging, we're bouncing now, but we're challenging a lot of these trend lines. Some people are saying we've broken them. I think that the market's vulnerable. Okay. I'm not ruling out a rally. Uh, we could have rallies at any time, but you see how we're just hanging out under this to generate a rally. If we could just get back over 6670, we could have one. But I think for this cycle, the top's in, and that before it's over, towards the end of the year, this is still my objective around 6220 or so. We're now under the 50-day moving average in the S&Ps, and here's your weekly. We've had, one, two, this be the third down week if it sticks, and we'll see what happens with NVIDIA. My just best guess is that NVIDIA will beat, but that the rally after the earnings are released will fail. That people will use that strength as a good out for if they want to liquidate some longs. So this, is heavy, and it's not the end of the world to see, 6140, 6200, 64 is going to be big. But I think that there are signs here that vulnerability is increasing. And one thing to keep in mind, like, people point towards the greedometer, which is at, I think, extreme fear, or, consensus sentiment, a lot of bearishness in the newsletter writers. You know, I do a lot of fading based on sentiment. And, one of the lessons I've learned over the years, it's that sometimes the majority could be right. Okay. And right for a while. And I've learned those lessons. I have the tire tracks on my back. So you can't, price is still the most important part. And if you look at the weekly RSI, we've been diverging in the S&Ps since here on the weekly. You're talking March 24. So for well over a year, and we've been diverging this year since the fall on the weekly. So, we didn't confirm here, and then this recent high didn't confirm. So I'm still with the bear case, even though I think that we could get a rally from here so that people could breathe a little sigh of relief. Uh, do want to talk a little bit about Bitcoin. So, everyone's bearish now. Okay. And I said you really have to wait for some type of divergence, and that you would probably get it in Ethereum before you get it in Bitcoin. And Bitcoin looks set up for a rally too. So maybe we're going to have risk on for a couple of days. But look at the RSI structure in Ethereum. See that? Didn't even get to 30 compared to Bitcoin, where it's under 30. So again, it held up the best. And if we're going to have a rally in crypto, I think it's going to outperform Bitcoin. So those are my calls in Bitcoin. I also want to talk about something in the market that just happened that's really not such a good sign for the market, and that's what's happening in the financials. Okay, looks like they're going to bounce today. But this is not great action. Here's a daily on the XLF. Look how long it's been generating distribution. This was a failing rally last week, and it really got hit. And, that's when the JP Morgan news came out. Bank of America made a high. It's coming off pretty good. It's trying to rally. So these were leaders besides, AI stuff, which, led was doing lapping the financials, but this was a very positive group since the April lows. And, they're due for a correction. Why can't we see 46 in B of A? Just some type of reversion to the mean of moving averages. The XLF looks worse because, it's not just banks, it's other financial companies that might have ties into the shadow banking system. So I wanted to cover that. We're getting some upside in the metals here today. I don't know if this spells, that this is going to be negate the failing rally or not in gold. In silver, I still think the double top is safe. I'm looking at the gold silver ratio, and this wasn't much of a bounce, and there is a what correlation between what the gold silver ratio does and the dollar. I don't know if I'm right about the dollar. Maybe, the gold silver ratio is going to come off again. Anyway, I don't know what to do with the metals. I knew to try shorts at 4,200. I don't know what to do with them right now. So I'll just let them continue to develop. Still think that we're going to get a rally in WTI up towards 64 or so, wrong under 58. And I still think you have to buy all pullbacks. Maybe we're going to get one here and then add gas. So I believe that's everything that I wanted to cover today. The main point being that I'm looking for a reversal in the dollar to start heading back towards 98. And that means the euro, that this pullback, based upon the live stream I did yesterday, I said there's support between 1580 and this old level of 1550, and the low was 1579. So if we could just start clearing some of this, it could just be a flag. We round out and then we get through 16 and a half, and I think 17 and a half is a viable target for euro. So feel free to come in, check out the room, leave your comments on this video. If you have any questions for me, appreciate your appreciation of what I do, and hope you guys have a great week. Let's see what happens with Turnaround Tuesday in the dollar and see if someone cuts the cord on US dollar yen to finally get some type of correction here. Yields are cooperating, so it looks like it's mainly Japan fundamentals because you have the 10-year trying to come down, but still looks like a consolidation before another push up. So those were my ideas for the day, and be careful out there. And you may want to think if you get some type of short covering bounce in the market to get out of the way. And if not, if you don't play the short side, start getting your Christmas list together, not just for presents for your family, but what stocks that you wanted to own, say, a week or two ago, and what would be an ideal price if we get this sell-off that puts them on sale going into January. So that's a wrap, everyone. Don't just count your pips, count your blessings. See you in the room.